Hey everyone, it's the Patient Hodler coming at you with another video, and in this one we are going to talk about the start of the crypto winter, about some factors that are actually different to the other bear markets, which I personally have not been a part of, but which are easy to find and research. Yet I want to put them into perspective for you here. But before we start, please keep in mind that I'm a crypto and NFT investor and not a financial advisor. So please do your own research before you ape full degen into all the crypto projects that are low at the moment. If you enjoy this type of content, please consider dropping a like, subscribe to my channel, and let me know what you think about those projects in the comments below. Liking, subscribing, and commenting are free ways to support my channel by feeding the algorithm. At this point, I want to also thank very much my remaining Patreons that are continuing to support me on my journey. So here we are right now in the fields, between two fields. I think this is quite beautiful atmosphere to talk something that is not so beautiful, but also a new path, a new way, a little bit of a split of divide. And I'm going to start with the following, because one of my viewers has pointed out that the Celsius FUD, or the Celsius potential insolvency and the loss of the assets of some crypto investors might actually not be the case or the reason of this Bitcoin crash. And that is correct, and I've never said so. I just want to point out here at this moment that when I am talking in such an update video about a crash, I'm talking about the ultimate and the recent lag down, such as the crashing down from the 1 month sideways accumulation, as I've mentioned in that video, to the level where we are right now, and not about the entire Bitcoin crash. I've pointed out in many videos before that the entire Bitcoin crash from its previous all-time high is caused by the global situation, recession fears, possible continuation of the plague, and many other concerns on a global scale that we are experiencing right now, and that put pressure on the stock markets as well. Now, with that out of the way, we can start talking about what is recently pressuring and what is recently raising concerns. And that is, first of all, that we have Celsius with a potential, let's say, liquidation price of $16,500 of BTC value. And if we think about a $20,000 Bitcoin price at the moment, at the point of taking this video, then we also have to consider that this is not too far away. Now, there have been also news that they have put down more collateral, which might lower this liquidation price actually. But if we are considering some of the bearish targets for this bear market, which are around 12 to 10K for Bitcoin, then we might also see that a possible liquidation of Celsius is not off the charts. The second one is another big Bitcoin bull institution here, and that is Microstrategy, possibly being margin called at already 21,000 US dollars, which is right now. Also, they can fill up this reserve with extensive Bitcoin influx from their other reserves to lower this price. But there we also have news about an institution that is going into trouble because of the current Bitcoin price that might go actually way lower than we are seeing it right now. Now, what do I want to say with that? The new situation that we have right now compared to other bear markets is, first of all, that we are obviously in this global situation as never before since the Bitcoin existence, basically since the existence of the whole crypto market. We have never been in a recession, or in the beginning of a recession. We have never seen rampant 40-year all-time high inflation. We have never seen the US dollar in the DXY on a tear, which is actually very bad for the crypto market and crypto market price development. but we also have never seen institutional investors, and therefore never seen institutional investors being affected by the current crypto, Bitcoin, or whatever other altcoin price that they might be heavily invested in, or as Microstrategy, for example, have picked up a loan with the backing of Bitcoin or other cryptocurrencies. So this is the first time for this, and as far as I am aware, this is also the first time that extensive crypto lending platforms and DeFi platforms could be sucked up in this vortex and downward spiral of the collapsing crypto prices. So this is obviously a very bad scenario. Then the second one is that this downturn, this beginning of a crypto winter, has real life consequences for real people with real jobs that are bringing in their paychecks and ultimately feeds their families, their children. And that is that BlockFi and Crypto.com as well as Coinbase have announced extensive layoffs from around 20% for Coinbase until only 5% for Crypto.com, if I am not mistaken here. This is also something that we have considered as new in the bear market, that the extensive hiring of those crypto firms might come to a stop, and that also many of the projects that are now suffering in this bear market and that do not have real use cases to work on and to build throughout this bear market might be laying off people. Now, all of this results in a cascade effect and in a domino effect that might bring down the price of Bitcoin and altcoins further than we have seen it right now. From a TA standpoint, obviously this could be a good time to bottom out, but from a fundamental standpoint, it might remain unclear for now if this is really the bottom or if we can go lower. I certainly think that we can at least wick way lower and then maybe close above the $20,000 line. I'm not so sure about the current development at the moment, but this cascading effect is very, very important to observe, because if these companies get margin called or liquidated, and if they collapse, obviously this will bring down the price more and bring more companies in trouble, as I have mentioned already. And on the other side, we remember it all started with Terra Luna. We have seen that someone unleashed an extensive amount of UST, of US Terra stablecoin, into the stablecoin to then depeg it and instigate this fear. Now, the current situation with Celsius, with MicroStrategy, makes them attackable for example, states or institutions or whatever other interested party might have an interest in bringing down certain crypto firms, the crypto price as a total. And I'm very sure that I don't even have to name them in this video, these parties that might be interested in bringing down a part of the crypto sector or the crypto price, that are interested in flushing out extensive amounts of retail investors, that they are start paper handing at cheap prices. So that is basically what I wanted to share with you, because we need to be very careful, because our assets on the centralized crypto exchanges are at stake. Jobs of real people are at stake. Whole projects are at stake. The well-being of crypto firms are at stake, and we are going to see a bear market that we will long after this talk about when it was the first time that institutions entered, and when it was the first time that gigantic projects and institutions collapsed under the false decisions that they have made throughout this bear market. As always, and I'm not going to digress from this, ultimately the one who makes the decision has to suffer the consequences and has to accept and own the consequences of his decision. So the question is, how will you act? How will I act throughout this bear market? Can I leave my coins, for example, on whatever crypto exchange that I am on right now? Or is it maybe a good time to think about moving some of those assets onto a ledger? Is it a good time to let the crypto that we have right now staked on the exchange, or is it a good time to actually unstake them and bring them to a ledger? I cannot respond that because this depends on your personal risk level. I, for myself, will let some coins like the Ecomi token staked on Ascendix, for example, but I will certainly put other coins which are supported on a ledger, on a hardware wallet, so that even when the exchange that I bought them on collapses, I'm not going to lose my assets. And then we will see how the bear market develops. And certainly coins that are staked right now for, let's say, 3%, it's not that much to really risk a larger amount of crypto compared to other projects that you cannot even put on a ledger, but that you can stake for 10 or 20% APY that you might want to risk. But all of this is obviously not financial advice, only my own opinion. I've not made up my mind quite yet how I want to act with regards to every project that I'm invested in. But with that said, I am already at the end of this video. And guys, this is highly debatable. Everything that I just said is highly debatable. Please let me know in the comments below if you agree, disagree, if you have something to contribute to that, which I have not on my radar right now. I'm always open to hear you, to learn, and to react to what you're saying. And with that said, wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon, and see you in the next video.